Surprises in the July WASDE report, some extreme weather events, and some export updates. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
Doing well. How are you this morning, Will?
Doing all right. For those of you who don't know, we normally record on Tuesdays. So the home run derby for Major League Baseball happened last night, and your boy Bobby Witt almost had some late time heroics.
Yeah, so if our viewers and listeners didn't already know, let it be known now, I'm a huge Royals fan. And so this is a golden age, I guess, of Kansas City sports. And the future certainly looks bright in Kansas City with Bobby Witt Jr. So really excited. That was an excellent home run derby. I thought he had it there at the end, but we'll see next year.
We'll see him next year, surely. Giving a quick rundown on a recap of prices, not too many home runs hit in the market the last week or so. We did see some big swings in areas like corn futures, but just looking at changes on the week, September corn contract down 3 cents at 3.90, December corn down 3 cents at 4.04. September 2024 soybeans down 63 cents at 10.33. The November soybean contract down 59 cents at 10.40. Soybean oil on a cents per pound basis down 2.8 cents per pound at 46.07. Soybean meal by the short ton for September down $13.90 at 314.10. That 24 wheat crop for September down 38 cents at 532. Looking at cotton cotton prices now for October up $1.37 or up 1.37 cents at 70.86. December cotton up 1.85 cents at 72.44. And then Ben, that West Texas Intermediate crude oil contract up or moved 49 cents down to $80.94. So a lot of light and moderate adjustments here, but we did see some big day-to-day swings in certain contracts. Where are you really seeing the market kind of settle out right now?
Well, we continue to see lower pressure pretty much across the board, but it's really that soybean and wheat markets that's really kind of just been taking a beating, and that's kind of put a lid on corn markets. We saw a bullish report last week, and we'll talk about that here in just a second for the corn picture. But the market was kind of unimpressed because of these large losses that we've seen in soybeans and wheat. It should be noted, Will, last night, Monday evening, there was some pretty strong storms, another derecho that worked its way across Iowa, Illinois, parts of Indiana. Our heart goes out to all those folks. We don't know what the extent of the damage is. In some cases, pretty drastic and localized damage that's going to have an impact, but unsure what the big impact to commodity conditions and markets is going to be as of yet.
Well, Ben, one of the reports you hit on that was really covered last week, looking at USDA's the recent WASDE, looking at supply and demand estimates, some shifts there. We did see corn prices kind of move higher upon that report's release, and it included some extra corn use that maybe wasn't expected and some other surprises. So what was the overall significance of this report, even though we've seen those prices kind of track back down since then?
Sure. So I think there was 3 notable surprises in the July WASDE report supply and demand estimate. I'm going to start with the corn just because that's where you kind of hinted at there. We did see, 150 million bushels of added old crop. So 23, 24 old crop corn demand that I'm not really sure anybody was anticipating. That's not to say that maybe there was somebody out there that thought that maybe we would see flat demand month over month with exports outweighing a decrease in feed use. But that's not what we got. We got 75 million bushels of added feed use, 75 million bushels of added export use. On the export side, I can understand that, right? We could make a case for added exports given where the commitments and the sales volumes are right now. The feed use is what was completely surprising. That June stocks report, the June 1 stocks report showed elevated stocks above expectations. As we talked last week on the show, that usually means 2 things. That either means last year's crop was undersold underestimated, meaning it was actually larger than what we anticipate or what's currently reported, or it means that feed use was actually softer than what was expected. And so that was kind of the expectation, was that we had softer feed use, and USDA would pull that feed use number down, and that's not what we got. We got higher feed use, both for the old crop marketing year and the new crop marketing year. That pulled stocks down, gave a little bit of a bullish spark to corn. But as we talked about, the market was largely unimpressed with the bullish nature of the report.
Well, and the market's been sitting in this spot to where, you look at the behavior of the managed money accounts and they continue to sell off futures positions and those options contracts. So they're not really overly concerned with buying those back as of yet. Maybe recent events like that derecho could maybe shift a little bit of that rhetoric, but we'll have to wait and see on that. But what are you really, getting the sense from the market now when you see that behavior? And maybe there's a little brief uptick in certain areas, but again, like the market pressure, like you said, it was largely unimpressed. So those prices kind of came back down over the last few days. So where do we go from here?
Well, so I mean, this certainly helps, I think, tighten the corn picture up a little bit. I think analysts are a little bit skeptical that we won't see some bigger adjustments, even in the old crop supply numbers by the time we get around to September. Maybe USDA does revise that old crop corn number higher, that production number a little bit higher, and kind of, back off some of these corn feed use numbers. The other thing that, was in that WASDE report, my second surprise out of three, was the wheat numbers. And I think that feeds into this corn price action as well. The wheat production numbers were sharply higher than what was expected. All wheat production up 100 million bushels relative to expectations. It really came in the spring wheat categories up in North and South Dakota, especially North Dakota. I think maybe this is a little bit of a teaser of things to come. If I can maybe try to draw some conclusions that maybe I shouldn't, right? Like the fact that the wheat crop is maybe looking as well as it is with production numbers where they're at, maybe that's a little bit of a hint of where we could see corn and soybeans in North Dakota as well by the time we get around to that first production, kind of field estimate in August and September.
Well, Ben, looking at the demand side of the picture, looking at some export action, it's been relatively bearish here in the near term on what we've seen, both on the grain and oilseed sides. So do you see this report kind of linking into maybe, talking about what could happen a little bit more farther out, than just the immediate future and some of these bearish sales that we've seen?
Yeah. So the big concern for exports across the board has been in new crop. The new crop book of sales for both corn and soybeans is pretty weak. For soybeans, this is arguably the weakest export book of sale we've had ever, but certainly back 20 years plus, right? The reason I say ever is because it was, back 20 years ago, we didn't really have the big run up in protein, soy meal, and protein demand in China. And so it was kind of a different environment than where we're at today, but certainly a very weak book of new crop sales. The old crop book of sales, is hanging in there. Soybean still has a small surplus in terms of total commitments, but we've kind of been working that back down, or that's been declining. On the corn side of the ledger for current year 23-24 exports, so we've seen kind of slow export inspection. So we're behind pace anywhere between 60 and 100 million bushels, depending on which conversion factor you use. But 60 and 100 million bushels behind the pace needed on the actual shipments, bushels leaving the country, but yet commitments are actually running ahead of pace. And so what this means is that there's some countries out there that have shipments that they need to take, sales that they need to take shipments of. I did a little digging, and I was pleased to find out that for the majority of the outstanding shipments that we have left to go, most of them are to Mexico. Now, the reason that I'm pleased with that is because Mexico has a tendency. Mexico has a tendency to take those shipments because of our geographical proximity. China has very few corn commitments left to ship. So if we see more shipments into China, it's going to have to come with fresh sales, given where we're at in the marketing year and kind of the price premium for U.S. products over Brazil. I don't anticipate fresh sales into China. So I think Mexico presents us an opportunity to hit those export targets. And so I do actually think USDA was justified in that 75 million bushel increase in old crop corn exports.
Well, shifting from corn more over to the soybean picture, we got some interesting numbers out of the most recent NOPA report, and it was almost it was one of those things where it's a positive. We saw record amounts, but it still came in a little bit of a disappointing fashion. So we saw a new record for the month of June on the crush front, but it was below estimates. What is that really telling you about the state of the soybean market?
Sure. So I'm not too worried about this. Yes, the trade missed by a little bit, but it was in the range of expectations, and by a little bit, it was a couple million bushels. But still within the range of expectations. In some ways, I'm breathing a sigh of relief. I was kind of nervous of what this number could look like for Iowa, South Dakota, parts of Nebraska. Due to that flooding. And we talked about this on the ethanol front a couple of weeks ago about how we could see a lower ethanol number because it's not just the plants being flooded, but you also have to have the rail infrastructure to move oil and product away from the facilities. And given how many railroad tracks we had heard were flooded, I was kind of worried that it would just cause a backup and these plants would slow down, and we would see a much lower, a surprisingly lower soybean crush number. And we didn't get that, right? Like, yes, it's low, but we're still on track to hit USDA's soybean crush number, a very strong crush number for the year. And I think the fact that we didn't see a surprising dip, given all the flood pressure we had in June, that to me, I'm breathing a sigh of relief. And I think this number will continue to plug along, and we'll have a new record soybean crush number for 2023-24, carrying us into 24 and 25.
Well, it's one of those things where you keep seeing record after record. It seems like these NOPA reports. But Ben, moving forward, what should farmers and ranchers really be paying attention to that could move the markets? I know we talked about that derecho and have to absorb and see how much of an impact that might have. But what else should they really be paying attention to?
Yeah, so this week, as we think about market action, there's not a whole lot of reports that are going to come out that I think are going to be totally surprising. We're going to continue to watch for fresh sales in that export sales report Thursday morning, namely on the soybean side into China, on the corn side, making sure that we continue to see the export shipments or the actual physical volume shipments that we anticipate to see. But we have a rather quiet week. There's not a whole lot of economic data coming out to influence the macroeconomy market. You mentioned the derecho and crop conditions. We'll hear anecdotal reports. There's already pictures out on social media, and we'll start to analyze that. But I think in general, the market struggles with these weather events, and we could make all sorts of conclusions that we want here. But we saw the same thing with the flooding and the hailstorm in Nebraska, and now this derecho in Illinois. The market just doesn't care about it, unfortunately. And does that come back and bite us when we get our production reports later this fall? Potentially. But right now, the market doesn't really seem to matter.
All right, Ben, it's always a pleasure to have your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about us and what we do, or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.